Hey everybody, it's Scott Lee Davidstein back with another Wow Wednesday, Words of Wisdom Wednesday. And today we're going to touch on closing costs, what they are, who pays them, and kind of a little bit of the outline of what exactly comprises closing costs. So jumping right into it, there's two things that are comprised into closing costs, and it's closing costs, it's in the name. There's also prepaids, and prepaids are anything that is prepaid. Again, it's in the name. Starting with prepaids is the interest for the month. So let's say you're closing on July 15th, and write that date down because that's my birthday. So we're going to close on July 15th. We're going to collect interest from the 15th of the month until the 31st. Mortgages are due in arrears, are paid in arrears. So August 1st, we've collected that interest at closing or at settlement. So August 1st, you don't have a mortgage payment due. So you close on July 15th, my birthday. You're going to skip August 1st. Your first mortgage payment is going to be September 1st. That comes in really handy when negotiating if your clients or if yourself, if you're buying another home or moving out of a rental, you have that gap month where you might have to carry two mortgages or you might have to pay rent and a mortgage at the same time. That'll give you a little breathing room. Prepaids also have taxes and insurance setting up your escrow. Insurance is always paid 1 year up front. So you're paying the insurance company from July 15th of 2021 to July 15th of 2022. The lender, you're going to pay 1/12 that policy into your mortgage every month. The lender is going to pay that for you on your behalf the following year. Taxes are the same way. In the DC, Maryland, Virginia area, taxes are typically paid twice a year, the June-December timeframe. So we're going to set it up so that when they're due, there's 6 months in there and maybe a month or two as a buffer in case the taxes go up, which is a good thing. It means your home is appreciating. So we're going to set up that buffer. So we're going to collect, we'll call it 6 months into that escrow account for you. The lender is going to go in there and pay those taxes for you on your behalf twice a year, every year as long as you have a loan. So the only thing you have to worry about doing is making that mortgage payment once a month for the next 360 months. And the lender will take care of paying the escrow for you for your homeowner's insurance and your taxes. HOA is paid separately and that's paid directly to the HOA. That is going to be included in your paperwork, but we're not going to escrow for it. We just need to make sure that it's in your debt to income. So we have a true depiction of what that is. The next section, and I'm going to try and talk a little faster so we can wrap this up so I don't lose your attention. The next section is closing costs. And we don't charge any junk fees, but the lenders that do, that's where you will find these junk fees. Application fees, lock fees, just anything that you, settlement fees, anything that you don't really get a tangible item for. And those things also go into your APR. Also origination points, when you're buying down your rate, they fall into the closing cost section. And the paying points is a topic for another day, but it's a percentage of your loan amount, not your sales price. Things that are in the closing cost section of what's due at settlement would be origination, lender fees, title company costs, your state and county taxes, and any kind of title insurance as well. And that's kind of the down and dirty of what's in the closing costs. For a lot more detailed explanation of what they consist of or kind of what's variable from company to company, just give me a shout, 703-209-3138. Have a great week and I'll talk to you next Wednesday.